Belgium has the highest tax burden on workers of any country in the OECD. A single average worker hands over 52.5% of their total labor cost to the state. Here is exactly what disappears from your payslip every month. You work hard all month. The gross figure on your contract looks decent. Then you see your net pay and the number is shocking. Where did it all go? Belgium has one of the most complex payroll deduction systems in the world. Your employer pays you a gross salary. But before a single euro reaches your bank account, your employer has already paid a massive tax on top of your salary that you never even see. Then your own contributions come out. Then income tax. By the time it lands in your account, the take-home pay of an average single worker in Belgium, after tax and benefits, was just 60.5% of gross wages, compared with the OECD average of 74.9%. That gap is not an accident. It is the system. The floor of Belgium's wage system is set by Collective Bargaining Agreement number 43 of the National Labour Council, the Guaranteed Average Minimum Monthly Income, known as the GAMI. It applies to all private sector employees aged 18 and over with an employment contract. Social Security contributions are governed separately by the National Social Security Office, known as the ONSS in French and the RSC in Dutch. The employee contribution is a flat 13.07% of gross salary, withheld at source. It is uniform across sectors and salary levels, with no ceiling. Income tax rates are set by federal law, with 4 progressive brackets ranging from 25% to 50%. Belgium's minimum wage was revised as of April 1, 2026. The rate for workers aged 18 and over rose to €2,189.81 per month. That is the floor. Most workers earn above it. Your employee Social Security contribution is 13.07% of every euro of gross salary. On top of that, your employer pays a further 27% of your gross salary directly to the state, a cost you never see on your payslip, but that determines exactly what your labor actually costs. On income tax, Belgium has 4 federal brackets: 25% on earnings up to €16,720, 40% up to €29,510, 45% up to €51,070, and 50% above €51,070. On top of federal income tax, your municipality adds a further surcharge, typically around 7%, calculated on the amount of income tax you owe. Belgium has the highest personal average tax rate in the entire OECD at 39.5% of gross wage earnings. No other country comes close. First, check your payslip line by line right now. Your Social Secretariat is legally required to break down every deduction. If anything is unclear, contact the Federal Public Service Finance, that is fin.belgium.be, where you can run your own tax calculation using the official TaxCalc tool, free of charge. Second, check whether your employer is applying your correct tax-free allowance. The basic personal tax allowance is €10,910 for income year 2025 and €11,180 for income year 2026. Every worker is entitled to this. If it is not applied, you are overpaying. Third, if you believe your Social Security contributions or withheld tax are incorrect, file a complaint at employee.belgique.be, the official FPS employment website, or contact your trade union. You have the right to a full written breakdown of every deduction made on your behalf. We have written the full breakdown of the Belgian payslip with every verified figure for 2026. Read the complete article and run your own numbers using our free salary calculator. Find both at EuroDuty.eu, link is in the description.